Hello everyone, welcome back to Just Invest Today. And today we're talking about Alibaba's earnings for Q1. Yes, they beat on everything, but the market has not rewarded that result for Alibaba. This is almost predictable at this point, but who cares? We know we're still strong Alibaba. We're still gonna hold the stock. Right after earnings beat, the revenue grew around 14%. It beat on EPS, it beat on revenue. It went up to $101 around that stock price. And then it went right back down the next couple days. Now it's at around $92. Even though Alibaba in this quarter is hitting on all cylinders, it doesn't matter. The stock is just not being rewarded. So guys, we have to do a deep dive on what happened with Alibaba this quarter. And honestly, there's some good things, some bad things. So let's really break down this earnings report from Alibaba. So Alibaba killed it for this quarter. We're gonna get into the business results right now. There were two things I kind of disliked about the quarter, which we're going to really get into. But let's start with the amazing results that Alibaba reported for Q1. Revenue growth of 14%. Guys, we've been kind of clamoring for this. We've seen Alibaba the last couple quarters, 2%, 1%. The customer management revenue has been always down. So for them to get back to this 14% growth is very aspiring. And it just shows you that China is not done. The economy is not done. No matter what everyone wants to say, China is still growing. Baba is still growing. Operating margins were up to 18%. Free cash flow margin was up 17%. They generated around $5 billion of free cash flow, which is amazing. They just keep increasing their free cash flow quarter after quarter, year after year. So this is very substantial for Alibaba looking into the results. Now we actually go into the individual business segments, and this is super key because remember, Alibaba is splitting into 6 different companies. So Taobao Tmall up 12%, international commerce up 41%. Guys, remember, they're splitting these businesses up. Local services 30%, Xiao Now 34%, cloud 4%. And this is where I have the kind of issues. Cloud is only growing 4%. Remember how they are projecting that cloud is going to have this huge expansion. A lot of China is going into cloud services. Alibaba is starting to release their own AI infrastructure. So we want to see this grow faster than 4% because a lot of our thesis with Alibaba is this cloud segment taking off almost like AWS. So to only see 4% year-over-year growth is kind of underwhelming, but we can still give it more opportunities to grow, especially since people are not spending as much on IT services and cloud services, especially because as people are saying that the Chinese economy hasn't really expanded yet because a lot of consumers are still hesitant. A lot of businesses are still hesitant to spend money. So we got digital media up 36%, others up 1%. So overall, everything is growing smoothly besides this cloud segment, which we can still kind of give it some leeway in my opinion. What do you guys think about the cloud growth? Is it not meeting your expectations? Are you guys kind of not satisfied with this cloud growth? Is this a reason to sell? Because a lot of people's Alibaba prediction was on this cloud growth having huge expansion. So what are your thoughts on everything that I'm saying? And those growth rates don't really tell the whole perspective of what's happening with Alibaba's business, because when you really look down into it, it's amazing. Income from operations grew 70% year over year. Adjusted EBITDA up 32%. Amazing. This is where it all comes down to. Amazing operations. Cost of revenue 3 months ended down to 61%, so down 1%. 3 months ended. Product development expenses down again 1% to 4%. Guys, this is all amazing. So they're actually growing while reducing expenses. And remember, back 2 quarters ago, they were telling you how they're going to become more profitable. They're going to look at their expenses and where they can kind of cut down their costs to make more money. And they're just killing it on all fronts while growing. So just imagine if they keep this up. Sales and marketing stays the same, 12%. 3 months ended, quarter over quarter. General and administrative expenses, again, only 4%. So guys, you're just killing it when it comes to expenses and just keeping the costs down. That's what we want to see. Getting more growth, getting more income while keeping costs the same. How can you lose on that? $5.3 billion of free cash flow for this quarter. So they're just killing it. They're growing their free cash flow. Cash and cash equivalents net is $57 billion. And remember, you always have to keep in mind that Alibaba is worth around $233 billion. With this net cash position of $57 billion, That's around 23% of its market cap just in cash. That's incredible. So they're not even using it. They're probably going to use it for growth. And this quarter, they only bought back around $3.1 billion of shares, which is only like 1.3% of the market cap. And that's where I'm very upset. Like, they're not using all the cash, or they're not using all that free cash flow to keep buying the stock at these cheap prices. Like, it's just insane where Alibaba is trading at. Basically, the stock hasn't done anything since the IPO. It's still at the same price or even lower. So that just goes to show you how cheap this company is at this point. So they just need to gobble up more shares, because people are just going to keep selling, especially because the Chinese sentiment is just at all-time lows. And I really believe that it's going to stay at these lows for a long time. So they really need to actually buy back their shares at these cheap prices while it remains here. And that's how we as investors at Alibaba, we have to just stay calm and understand that this business over time, like, the share price has to match the returns of the business and the earnings over time. And the business results is the key metric. Customer management revenue up 10%. So people are actually increasing their spend. The merchants are increasing their spending on advertisement. So it's getting back to that growth. And that's what we like. The merchants are actually happy with the product and the services on Alibaba. It's getting back to the growth prospects. We have daily active users up 6.5% year over year. Again, we have more users on the platform. So they're providing a lot of value to the consumers. And this is what we want to highlight, the business results, not the stock price at this point. We understand that the business results are gonna just reflect the stock price over time. So we can just wait and sit back as the business results keep growing. They doubled their membership of 88 VIP members. So that's almost like Prime membership for Amazon. So that's growing as well, man. So that just goes to show you that the business results are actually increasing while the stock price is just going down and down and down to the gutter. So as Alibaba shareholders, we can wait and sit back and just enjoy this ride, as we know earnings have to match the stock price over time, or they're to keep buying back shares at these cheap prices. In my opinion, everything's going to work out eventually. Guys, what do you think about this earnings report? Leave your comments down below. Peace.